Hey everybody, JJ here. It is Friday, September 25th, 2020. Hope everyone's doing well. We made it to the weekend. It's about 4 o'clock p.m. Pacific time as I'm recording this today on Friday. I'm going to do kind of a market update, a market weekly wrap up here. We're going to get into some other news as well. And as always, I'm going to give you, my take on the broader economic situation here. But just to take a step back like we do every Friday, what we're seeing here is an economy that's already been destroyed. We're deep in recession. Many would argue that we're in a depression when you see the level of dependency. Now, of course, it's being disguised, it's being masked by all of the stimulus and all the assistance programs. And we've discussed that here many times, so I won't go too much into that. You know what's going on. But I'll say the problem with this continuous propping up of this market, of this system, the stock market, the housing market, all the loose lending, the endless loans that can be created now by the banks with no reserve requirement. It's only going to further distort markets. It's only going to further separate fundamentals from actual prices, right? And that's a problem. Now, here's a recent article out of Yahoo Finance. Focused on survival. Millions of laid off Americans still living without health insurance. All right, so let's look at both sides of the argument. You have countries like Canada, they have universal health care, but you can also get private health insurance. Right, so on one side of the argument, you hear, okay, that's great because no one is going to be forced into bankruptcy. No one's going to go without health insurance. And then you have the other side of the argument, and a lot of people say, no, that's socialism, that's bad. But when you look at the U.S., we have socialism here, but it's mostly geared towards rescuing corporations and markets and not towards helping people with their medical bills. You see what I'm saying? So we have socialism here, but it's the worst kind of socialism. It's corporate socialism. It's corporate welfare, as many would call it. So while I don't like seeing people relying on the government for anything, I would rather see people assisted with health care versus corporate welfare. But let's just go ahead and erase both sides of that argument. Let's say there was no intervention, no assistance. If that happened, prices would adjust to what people could afford. It's something called supply and demand. So we no longer have basic business fundamentals. We no longer have basic economic fundamentals because of all the assistance programs, because of all of the distortions that are thrown out there from lending, endless debt, big brother intervention. You see, if hospitals didn't have health insurance to pay the bill on their patients, they would have to lower their price. Why? Because without health insurance, most people can't afford even basic medical now, even a basic doctor visit. Most people don't have enough money saved up to go pay out of pocket for a doctor visit. People have to pull out their insurance card just to see the doctor because of the flu or something like that. It's completely outrageous. And there was a report that came out just about a year ago, and it says the average emergency room visit was almost $1,400. That was as of 2017. The article just came out last year, but so it's not gotten better since then, I guarantee you that. So you sprain an ankle, you get a cut, you have to go to the emergency room, you're out of pocket $1,400. That's what many people make in 2 weeks. And then if you have to take time off of work because you're injured, now you've lost time from work, you've lost income, and then you've got that extra expense. And that's why bankruptcy, the number one cause of bankruptcy in the U.S. continues to be medical bills, medical debt. And why are health costs so outrageous? Because of the intervention. So now you've got overinflated healthcare costs because nobody really price comparison shops when they get injured, when they have to go to the hospital. Right? That would be silly, right? Just whip out the insurance card and you don't care what it costs. So that allows hospitals and caregivers and doctors to charge exorbitant prices. But now you're unemployed, you don't have health insurance, you don't have government health insurance either, unless you qualify for some other benefit. Maybe you're retired and maybe you're on disability or some other benefit program. So now millions of people don't have health insurance. So expect to see the life expectancy, we're likely going to see the life expectancy drop. Because now people that have to pay cash that don't have insurance, most of them are not going to be able to pay for basic medical needs and doctor visits. Okay, and this is just an example, but we have price distortion all across the economy wherever you look. Wherever there's easy money lending, wherever you have people throwing money into a pool in order to help those other people that have the claims, well, you're going to have massive price distortions. All right, let's get into some other updates here. These are the markets. Today we saw a rebound in the S&P, the Dow, the Nasdaq, the Russell, all up between 1.5% and 2%. Oil still over $40. Gold coming in at $18.64. Silver a bit of a hit, down to $22.99. Now, anyone investing or betting on the stock market to go up now is just betting on the Fed to be there to support the markets. Right? These markets have been fundamentally disconnected from reality for a long time, many years. Right? So if you're investing in the markets, you're likely just speculating of what the Fed's going to do. You're speculating, you're betting that the Fed's going to be there to support the markets. And that's why you have so many eyes glued on the Fed when they make a speech, when they have a news conference. Right? What do the Fed say? What do the chairmen say? Are they going to lower rates? Right? Are they going to do more stimulus, more bailouts? Are they going to purchase more corporate debt? Are they going to buy more ETFs? And now, starting earlier this year, the Fed has been merged with the Treasury, and many people are saying that's even worse. Now you've got politicians with even more control over monetary policy and the direction of interest rates, rescue programs, you name it. We already know recently, too, by listening to the Fed, he came out and said likely no rate increases through 2023. So that should tell you that they're scared. They're scared to raise rates because they know this whole house of cards is just based on debt. And it's a house of cards built on sand. Right? More record low mortgage rates. Earlier this week, rates hit another record low and they're hovering around near all-time lows. So they're going to keep the housing market inflated, you bet. And all of this propping up, again, it's going to have to continue. All the forbearance programs, the eviction moratoriums. If it doesn't, if these rescue programs are pulled away, you're going to see a massive devastation. And right now the devastation's there. It's just being hidden. Recent article here out of Financial Times. The next crisis may be coming soon, right? Nobody really knows. So you always have to throw these words in here. Maybe, likely, possibly. And the senior writers over here at Financial Times, they have to say maybe because they don't know. So may be coming soon. Fears of a credit crunch have already hit business confidence. See, so it's all about credit. It's all about banks coming to the rescue. And remember, credit, the flip side of credit is debt. So the key to keep this financial crisis away is for businesses, to banks to keep lending, to issue credit, for people to take on debt, to continue the economic illusion. Okay, so the economy, it's a debt-based illusion based on unlimited currency creation, unlimited debt, unlimited market backing, and it's anyone's guess right now. Anyone telling you what's going to happen with these markets is either guessing, guesstimating, let's call it. They're theorizing. They have theories of what's going to happen, but nobody really knows. There are people that are convinced that the Fed is going to push this market all the way into hyperinflation. Unlimited dollar printing, unlimited dollar digitization, whatever you want to call it. Right? So to be safe in these markets, in my opinion, you've got to play both sides. You've got to be ready for both directions. Have assets in case there is that hyperinflation, in case the Fed keeps pushing these markets into the stratosphere, and they're going to push the cost of living up with it. But on the other hand, you have to prepare for some sort of unexpected event. Expect the unexpected, and something that rattles this entire system, like a power outage, a bank failure, who knows, more civil unrest, maybe war. All right, something crazy that no one expects. Expect the unexpected. There could be massive deflation. As soon as something goes wrong, they could say it's a glitch. And then you see deflation, so you're going to want to have some purchasing power in case there's deflation. I'm playing both sides the best I can, and that's just my analysis. I'd like to hear from you on this. Let me know what you're doing down in comments. I know we talk about this a lot, but preparation and trying to figure out what's going to happen and the way to position ourselves is what we have to do. We can't change the system. We can only try to function and maintain within this system. All right, thanks everybody for watching. Hope everybody has a great weekend. I may be out with a video Saturday or Sunday. We'll have to see how things go around the house here. But I appreciate all your support. Thanks everybody. Hope you stay well, stay safe, stay prepared. Bye for now. Peace.